Hello, this is John Lynch with Tax Pro Partners, and the purpose of this brief video is to give you a brief demonstration of the screening software that we use with Stryde to pre-qualify businesses to determine the estimated savings they're likely to realize based upon almost 18 years of experience with over 500,000 cases. So the algorithms on which this is based are pretty, experience-based. So we're not just picking numbers out of the air. So I've set this up just for a test company here, and let's see. We have to pick an industry since the numbers will vary with the industry. The experience obviously is different with all of these various industries. Let's pick manufacturing since they're experiencing something of a downturn now and probably need some help with their cash flow. We won't fill in all of this. This we would do if we had an actual client here. So we'll just go through this now with this test company. So first question, do they own any commercial property? And I'm just going to pick some arbitrary numbers here. We could run this, or you could run this for your own clients with actual numbers, but this is just for demo purposes. So let's just say the building is $5 million, or was either in purchase cost or building cost. And let's just say they've put another $600,000 into renovations since then. So that gives us a total cost of the facility of $5.6 million. We go to our next item. Property taxes. Again, I'm going to pick arbitrary numbers here. Let's go with $55,000 a year. That's pretty arbitrary. And let's move on to the next item. Payroll. Of course, their annual payroll is going to be more than that. Let's go with $3.2 million. Okie doke. And let's say they did have revenue before 2014. If they didn't, there would be a different calculation. They might be entitled to some additional startup savings. And let's go on to our next. Employees do you hire per year? Let's say a dozen. Keep it modest. And move on to our next category. Of course, they take credit cards. Who doesn't? Let's see. $3.2 million payroll. Oh, let's just say $4 million. It's probably conservative. Okay, and they would be not swiped. And let's see, what next? Waste and recycling. This is usually a pretty small number, but let's say it's $750 a month. Probably not realistic, some of these numbers, but you'll get the point. Workers' comp premiums over 40,000. I'm going to say 60,000. Self-insured, let's say no. Again, you could run these numbers on your own and actual or hypothetical clients and come up with your own estimates, but this will give you a pretty good ballpark of what this client can expect. And obviously this is subject to an actual analysis that we would do for each of these items using people with expertise in each area. So this is just a preliminary screening, but again, it is an experience-based, based upon the Stryde's experience all these years in this particular industry. So as you can see, the hiring tax incentives, this would be mostly work opportunity tax credits, but also other state and local ones. $14,400. Waste and recycling, as I said, not worth bothering with that one. Workers' comp premium, $9,000. That's about 15%, I think, of what we put in there. Credit card overpayments, $24,000, which works out to on $4 million, about 0.6% savings. Payroll tax credit, which is going to be R&D credits, would be $166,400. Property tax estimated savings, $9,200. And then the commercial property owner's incentive, which would be primarily your cost segregation analysis, which would come out to the largest number here, obviously, $414,000 and change. Total estimated savings, $637,515. And then we can do a little bit of an analysis of each of these, a little explanation really, which just sort of breaks down each category, property tax savings based upon their actual property tax. And as you can see, they basically give you an analysis as this is a 50% fee. That there's no fee at all, of course, if we don't find any savings. That's the bottom line. So it's a risk-free option for clients and prospects. The property tax is 50% for 1 year. However, the savings go on into the future, obviously, since their property tax rate would be now lower, and there's no percentage of those future savings. So it's a one-time 50%, which works out to much less, of course, on an accrual and ongoing basis. And then at the bottom, there's an example of some clients that in this industry, manufacturing, who have been, and what their experience has been in terms of their actual realized benefit. So that's property tax. Now we have R&D credits. Manufacturers, of course, are highly eligible for these. So we usually don't claim them because they don't realize they're eligible. But this can be a significant amount of money as well. And these, of course, are all engineering-based studies, both R&D and cost segregation, which is what the IRS is going to require, or at least strongly recommend. Again, we're using people who have the requisite IP experience and expertise. And in this case, the fee would not exceed 35%. It can be less, by the way. These are not to exceed numbers, and often is less. Cost segregation, purchase cost was $5.6 million with the renovations included. Again, engineering-based study, reclassifying the property for depreciation purposes from longer-term to shorter-term depreciation, obviously, which results in a significant improvement and benefit in terms of the net present cash value. This again is based upon a feasibility study, which the company's accountants would file on their behalf. We don't actually do the filing. We're not accountants. We support the company's accountants, giving them the data and the documentation they need to actually claim these savings. And of course, the accountants generate fees for doing that. And then this case for cost segregation, the service fee does not exceed 10% of established savings, which is a real bargain. And then we get to hiring incentives. Now here we can see that with only 12 new hires a year, it works out to a little over 14,000. Again, these are not just work opportunity tax credits. There's a whole array of incentives that we review in screening companies for this particular benefit. And it's done on based each new hire is verified in terms of their eligibility for any of these hiring incentives. And this fee is charged at 15%, and then there's a monthly minor access fee just for the back end support, that back office support basically that we have to provide for this, since it's ongoing. Credit card processing, in this case on $4 million, $24,000 in estimated savings, which is based on our actual average savings in this industry of a little over 0.5%, 0.6%. Basically, this is like workers' comp. These are high transaction activities that generate a lot of mistakes and misclassifications. And basically, the auditors, these are not tax driven, obviously. These are audit related, vendor related. But we have specialists who do nothing but credit card processing, analysis and audits, and they basically screen for errors and find them to the tune of what nets out to a little over 0.5% in savings, which in this case is $24,000. And let's see, workers' comp, which we put in at $60,000, $9,000 estimated savings, 15%. Again, that's based on our experience, which is that over 70% of the companies are being overcharged for the workers' comp premiums. No real surprise there. Basically, however, you need to prove it. You need to document it. Let's see, what else have we got? Waste and recycling, let's not even bother with that since we wouldn't pursue it. What happened here? We passed, oh, yeah. So if you went through this with your own client, you would then come up with a number. If they were interested in $600-something thousand, I suspect they'd be interested. You were able to then schedule a time with them right in here in the app itself. And then pick a date, pick a time, and confirm, right? And that, in a nutshell, is how the app works. It's very effective once prospects see that there's real tangible dollars here and they're not just pulled out of thin air, but they're based upon actual experience in the industry for almost 20 years with 500,000 cases. It gives it credibility, obviously. And It doesn't cost them anything if to the extent it's wrong. If there was zero found, it would cost them zero. So it's a pretty low risk proposition for them, and it really can obviously enhance their working capital, their cash flow, their profitability, and obviously endear them to you as their accountant or CPA, and presumably improve your retention rates. And obviously it's a way to attract new clients as well, business clients, who of course are your best clients in terms of the complexities of their cases and the fees that they generate. And the commissions you can earn on this activity here, these savings, adds to that and gives you obviously a much stronger, more viable, more business-focused practice that is going to serve you well for the foreseeable future. So that's it for now. You can contact me at taxpropartners.com and learn more about it there. There's a free trial for the Stryde service, which is what the platform is called that implements this. And you can learn more about how to participate in that on a free trial basis, if you like, at taxpropartners.com. Thanks for listening. Hope to see you there.